Hi. Okay, so 3 videos into the channel. Totally exciting. I'm going to talk about my portfolio today. I've made some big changes. I'm going to talk about what I'm holding right now, why I'm holding it, and kind of what I expect over the next little bit. And I'm also going to announce an announcement at the end. A new challenge for the channel. Exciting. A big change in my strategy and why I just completely changed my portfolio and my new plan going forward. Welcome back to Out of Stock. I'm Hugo, 18. I've been investing since I was 14. This channel is dedicated to documenting my journal through trading, sort of my experience with how it's going, and trying to make something of myself and not lose money in the process. If you haven't watched episode 1 and 2, I recommend it because it kind of leads up to what I'm talking about in this video. So go watch that. And of course, this is not financial advice. I'm a teenager. Don't listen to me. Don't take life advice from me. That's stupid. Today will be a longer one. I'm going to do a full portfolio breakdown, talk about my change in strategy recently, and then an announcement at the end. So go get comfy, get a drink, try not to click off the video. So I'm going to start with the strategy because that sort of explains what's going on in the portfolio right now. For the last little while of me investing, I've been holding around 4 to 6 positions at a time. Don't put all your eggs in one basket. Diversify, as they say. But I noticed and started thinking about when I fully started stock picking that when I was making real money was when I was holding like 2, 3, sometimes 4 positions, but mostly 2 or 3. So I've made a big change and I'm going to talk about that. So the big problem was that with my portfolio size, having it spread across 5 to 6 positions at a time, there can be big winners, but it doesn't really move the needle of my portfolio. It doesn't make a huge difference. Yes, it's slightly safer. I'm not going to have one bad day with one stock and it's going to tank everything, but I'm not really making the gains I would be hoping I'm making. So that's why I've made a shift. For example, if I put 3,000 into one stock and it goes up 50%, that's pretty good, right? But it's only $1,500 that I'm making, well, only. But compared to my portfolio size, it's not making that huge of a difference, and especially if it's a huge mental struggle to be holding these stocks through big swings. So that's why I've changed my strategy, and I've made the decision to trim my portfolio down to holding only 2 to 4 stocks at a time. I'm going to run this for a little while and see how it goes, but I want to strictly focus on high conviction positions that I can put a large amount of capital in to actually make a gain on, or high conviction swing trades, which is why I have a bit of cash in my portfolio right now. And I don't think this is that reckless because yes, it's not as diversified, but if I can focus on 2 or 3 stocks at a time and not be stretched out between 5 or 6 or however many, then I can really focus my conviction and my thesis on a few positions and not panic sell at the bottom when I actually have confidence in what I'm holding. So at my age and with my portfolio size and my risk tolerance, for me, I think it makes sense for why I'm doing this now. When I'm 30 and I've got 500K in the portfolio, it'll be a different story, but for now, this makes sense to me. So I'm going to give a little context as to how the portfolio is doing and how it's looking as of today, July 6th, 2026. So the portfolio is sitting right around 18,000. That's spread across 3 stocks only right now. The first one, which I talked about in the first video, is ONDS. Of course, still my biggest position. I added more recently when I trimmed my last 2 stocks. It is still by far my highest conviction hold. I'm not selling a single share. I'm buying more and I'm buying more. It sits at about 32% of my portfolio right now. Then I have Rocket Lab at another 32% of the portfolio. It's slightly less than ONDS right now. Actually, it'll be a little bit different today because of the market, but still also one of my highest conviction holds that I'm not going to touch for a while. And then the newest one, which is NBIS. I'm going to talk about that real quick in a little bit, but that's sitting right around 23% of my portfolio. And yeah, I'll break down sort of why I bought into that one recently. And then lastly, about 13% of my portfolio is cash. That's just so I have a bit of dry powder to put in to buy dips. If any of these dip really hard, I can always add more. Or if I find a new stock I want to buy into, I don't have to sell out of a position just to raise capital to buy into that one. So I've got a little bit of wiggle room. So to break down each one of these stocks, I'm going to start with ONDS, of course. If you watched episode 1, you'll know my thesis on it, why I'm holding it. I still have a huge amount of confidence in this stock right now, especially at these prices. I'm continuously adding to it, especially going into earnings in August. July is typically a good month for stocks, so that gives me a little bit more hope as well. But I'm not changing a thing about the thesis. I'm not selling any shares, and I'm going to continue buying more. I think it's insanely undervalued right now, and the stock price is so detached from the company and their revenues, it doesn't make sense to me at all. Rocket Lab is the next one. I did say I was going to do a full breakdown of it in the last video, but I really wanted to put out this video, so I'm going to kind of bundle that all in to this video, if that makes sense. I've held Rocket Lab for just over a year now. I'm sitting on, I think, 70-80% unrealized gains and about 36% realized gains, but the realized gains are actually more than the unrealized in dollar amount because I bought and sold so much over the last year. And the big news recently was Rocket Lab acquiring Iridium for $8 billion. And I think this deal is huge because it's already bringing $872 million in revenue a year to Rocket Lab that's already continuously growing. And basically overnight, Rocket Lab went from just being a launch vehicle to having the ability to design, build, launch, and operate their own constellations through Iridium and their other projects going on. I think this really solidifies Rocket Lab as not just being another speculative space stock. It can now compete as a smaller version of SpaceX and Blue Origin. They are no longer just a small meme stock. It is seriously growing, and I don't see it stopping anytime soon, especially with Neutron on the way at the end of the year. Hopefully. This still has room to run in my opinion. So, and then the newest one, NBIS, I genuinely have no idea how to pronounce it, but I'm going with NBIS. I bought it last week. If you don't know NBIS, it's a full stack AI company. They build GPUs and compute for AI data centers. They're basically a neocloud. They're renting out their own compute to big companies to use their power that don't want to build their own. I know I did talk about NBIS a little bit in the last video, talking about my experience with trading. Yes, I did own it before at like 110, and now it's around 215, something like that. But I think even though it has had a huge run, after it dipped last week, which I'll talk about what happened there, I think it still has huge potential going into the future, especially with what their numbers are showing. Their revenue came in just under $400 million, which is up 684% year over year, which is absolutely insane. And the core AI cloud revenue grew over 841%, or around $389 million year over year. Full year 2025 revenue was $529 million, and Wall Street is estimating $3.4 billion in revenue for 2026, which is almost a 6x from the year before. And based on how Q1 looked, it might not even be aggressive enough. So why was it down so much last week? Meta announced that they will be building their own cloud compute infrastructure to sell access to third-party companies. And the market saw this as Meta directly competing with cloud providers like NBIS, CoreWeave, Iran, a bunch of other ones. And specifically, NBIS got hit really hard by this move. And I think the sell-off was overdone. The fundamental demand story hasn't changed at all. If anything, it's actually growing. So I think it was completely ridiculous. That's why I bought the dip. And I didn't even just buy a little bit. I put in basically as much as I could with still having cash available. Now that being said, there is some risks like heavy debt, ongoing operating losses. This isn't a safe stock. It's a risky bet on AI in the future, and especially going into 2026 and 2027. And lastly, the cash position. Again, I said it was about 13% of my portfolio, and I don't really have exact plans for it right now, but I'm watching a few stocks, and I'm going to kind of let it sit there for a bit until the right opportunity presents itself, and then I can deploy it as I like. So the main part of this video I actually want to talk about is sort of why I'm doing all this. Like, why am I documenting it? What's the point of the channel? Why am I investing so much at a young age? And then I want to announce a new challenge I'm putting on myself that I think will really help push me forward. When I started investing, I didn't think much of it, but since last year, as I talked about in the last video, and when I really started stock picking was when I realized that I could properly make money doing this and set myself up to have a little bit more financial freedom going into as I get older. I don't want to work a desk job for the next 40 years of my life. I want to have some level of financial independence when it comes to getting out of post-secondary. I'm going to post-secondary next year for a 2-year finance diploma, which I can stay for an extra 2 years and get a full bachelor's of business administration. So by the time I'm done, I'll be 22 and actually getting into the real world and need to start properly making money. So I want something to show for it, not just a degree, but a track record in investing. So that's what the big announcement is. I'm starting a new challenge on this channel, the road to 100K by 23. So right now the portfolio is sitting at about 18K, and I would like to hit 100,000 by the time I'm 23, which is just under 5 years. To turn 18K to 100K in 5 years, if I'm contributing about 4,000 to my portfolio a year, I need to return roughly 30% a year. Which is aggressive, but I do think I can do it. The 30% isn't going to be magic. I'm going to need to know where to look and what I'm looking at. Like, for example, Rocket Lab has been a 100% plus winner for me over the last year. If I had just put all of my money that I had at the time into that stock, I would have been way further ahead, but obviously I didn't know that. But same with NBIS, it's been up 500% in the last year. All it takes is 1 or 2 or 3 good picks, and that can really set me forward. And the reason why I picked 23 is, as I mentioned, because I will be freshly out of post-secondary if I stay for the full 4 years, and I don't want to just get thrown out into the real world trying to find a job, trying to find somewhere where I can make an actual salary and not have anything to fall back on and anything to keep me steady. I don't want to start at zero. I refuse to start at zero. So what the series is going to look like, I'm going to make a video at the end of every month or whenever something significant happens to the portfolio, sort of breaking down what happened in that month, where the portfolio is sitting at, what I've bought and sold over the last month, and how I'm doing towards my goal of hitting 100,000. And I'm going to try to be as completely transparent as possible, the wins, the losses, bad decisions I made over the last month, because obviously that is inevitable. And the goal isn't to like flex if things go well. I'm genuinely doing this for myself and trying to make something. I want to document a real attempt at trying to build wealth at a young age. And that's what I'm going to be doing with this channel. If I hit 100K by 23, sweet, that's great. If I fall short and I'm only at 70K by 23, still not bad. If I have a good understanding of the stock market at 23, as good as I do now at 18, when some people aren't even thinking about their futures like this, I'm still on a good path in my mind. Either way, I'm just trying to build something, and you can watch along if you please. So yeah, that's the full breakdown. 18K portfolio, 3 high conviction positions, the new change in strategy. I'm going to see how that plays out over the next little while. The next update on the 100K challenge will be at the end of July. I'm going to talk about how the month sort of went, which I have high hopes for because historically July is a good month for stocks, and I'll give an update on how the 5 years to 100K is going. If you're new here, this is Out of Stock. Welcome. It's all real trades, real money, real mistakes, and I'm going to document the whole journey, so follow along if you'd like to see how that plays out. Write a comment if you think 100K by 23 is feasible. I'm genuinely curious what people think. But yeah, that's it for this video. I'll see you in the next update whenever that comes out, or whenever I talk about next. We'll see. Who knows? But yeah, thanks for watching.